let's shift focus to EID Parry then, and to know more about the earnings and the outlook, Muthu Murugappan, who's the Chief Executive Officer of EID Parry, is joining us on the show right now. Very good morning, sir, and thank you so much for your time. Firstly, when we look at your numbers, they have come in quite strong. That's been aided by the sugar segment. But how is the overall pricing scenario? Give us some sense there, and going ahead in Q4, how are you looking at the realizations to happen and this growth rate? Will this sustain going ahead?
Very good morning, and thank you for having me on the show. In terms of sugar pricing, Q3 was a challenge. We saw, lower sort of sugar pricing even as compared to the same quarter last year, and that has, impacted the business. Q4, we are seeing better trends, and this is because I guess an export quota was recently announced of about 1 million tons, so that's had a positive impact on domestic pricing. In terms of the distillery, we haven't seen much of a change in realizations. They've been sort of stagnant for quite a few quarters now. Input costs have moved up though, particularly in terms of cane, and feedstock availability for us in TN was also a challenge, and this has sort of hiked up molasses cost, which we've had to insource, and this has put a pressure on the margins of the distillery segment. I mean, current margins are about, EBITDA margins are about 6%. Perhaps a year ago, they were 13, and if you look at about 6 quarters ago, they were even closer to 20%. But we expect these margins of 6% to hold or marginally dip, given the current scenario.
Good to connect with you. When we spoke to you last time, you said that EID Parry was on a cusp of migrating from being a pure plain vanilla sugar company to a branded sugar company, and then moving into other FMCG stroke spices. And that's a migration which excited everyone in the market, that the past of EID Parry or the future of EID Parry will be different from the past of EID Parry. Where are you on that migration path?
So Nikunj, thanks for the question. As you can see, we've started reporting the consumer product group independently now, and this segment has grown well. The sweetener segment has grown, and I think the non-sweetener segment, it's been 9 months into the launch of staples, which is rice, dal, pulses, and millets. We've had a fair start to this segment as well. And I think we will continue to grow the branded staples and the sweetener segment and look at expanding into new product lines as well. I think we have built that expertise of branding the unbranded, and there's also a good equity that the brand Parry has. I think we'll focus on enhancing it going forward.
In the light of where the ethanol pricing is moving, because ethanol is also now a very big stay for sugar companies, how is that business likely to progress? Because markets, in a sense, were expecting that the ethanol prices, which government provides, would go up by about 4 to 5 rupees. The net change is about 1.5 to 2 rupees. How will this impact your future growth in the ethanol business?
So Nikunj, on ethanol, we've had good growth in volumes. I mean, if you look at our YTD volume growth, it's about 35%, and I think we will end the year perhaps with about 40% volume growth. This is on the back of good demand on account of the ethanol blending program and capacity expansion which has happened at our end. I think as I mentioned a few minutes ago, realizations have been a challenge on the back of input costs going up. These have squeezed EBITDA margins. At 6%, our paybacks also will get delayed. Ideally, we should have had EBITDA margins of closer to 20%, and that's how we sort of modeled the business. We're really hopeful that there will be longer-term sustainable policy framework which comes in on the biofuels front. I think it's an excellent program and a great opportunity, but perhaps there just needs to be a more formulaic, longer-term policy approach towards biofuels that would certainly help the sector. We're seeing more saliency towards grain than originally envisaged. I think the policy, when it was put together, envisaged 65% sugarcane-based feedstock. That's perhaps down to about 35% now, and there's a greater saliency towards grain.
Muthu, so let's talk about, the other expansion. You were talking about FMCG last time we spoke. You were also talking about Nutraceuticals. Tell me, what exactly is the plan in the year ahead? How much capex have you outlined for these other businesses?
So Aisha, on the nutraceuticals front, I mean, we did a pretty deep strategic review, and I think we realized, we are subscale in that business, and I think we'll have to do a little bit more to really discover the right value on nutraceuticals. So I think we're the sort of, back into the trenches trying to do that work to discover better value on nutraceuticals. A big focus will go into the FMCG expansion in the coming years. As I mentioned, expanding the product line, strengthening the brand equity, and of course, building distribution will really be our key areas of focus. We really aim to exit the decade with a substantially larger business, very likely larger than our, milling business, with a high single-digit percentage EBITDA margin. This is really what we are working towards on the FMCG side.
A sense on the sugar side as well, because now that in the recent news flow we see that the restrictions on the sugar exports have been lifted. On the other hand, the demand has been quite modest. The pricing is seen to be moderating, but all in all, the sugar production as a whole is also inching up. Given these scenarios, help us understand that particularly for exports, what is the outlook that now that the restrictions are lifted, how will it change, make a change for the company?
So Shristi, I think in the current sugar year, we are actually likely to see a dip in sugar production. We're seeing lower yields and early closures of sugar mills, particularly in Maharashtra and Karnataka. And we're also seeing lower recoveries in UP. So closing stocks last year, which were about 8.9 million tons, are likely, ISMA has announced that it would likely dip to about 6.5 million tons this year. It's perhaps also very likely that they will review this number in their upcoming meetings. So sugar stocks are coming down a little bit on account of lower crushing. Pricing on this account should hold at these levels. This is what we expect. There's been 1 million tons of export which has been granted. There's no clarity as to whether there'd be more exports. I would find it hard to believe that the sugar balance would, allow more exports, at least in the current sugar year.
I have one follow-up question, which is that on one side, there is this whole pressure on MSP, which is more like a political factor which is at play. Second side is the sugar prices, which are a function of sugar crop. And third side is the international cycle. How will these three things blend together? Because MSP will ensure that sugar cane prices, they go up higher. Then there is this whole policy factor which is at play, that domestic sugar prices beyond a point cannot go higher. Inflation वापस आ जाएगी, चीनी महंगी हो जाएगी, मिठाई महंगी हो जाएगी. And then there is the international sugar cycle which is at play, where I have no idea how it works, but every 2 years I keep on reading about Brazil and Brazil and Brazil and Brazil.
So Nikunj, let me start with domestic, right? I think I talked about a sustainable policy framework. I mean, that would really be useful for the industry. A real formulaic approach, right from farm to consumer, really keeping in mind and sort of syncing input costs to realizations and sugar availability would really be useful, because otherwise, where sort of industry and policymakers are sort of constantly having to address this with more short-term interventions. From a global standpoint, I think when we export, we play in the global market, and India is not a permanent exporter. Only when there are surpluses, export happens. India and Brazil are the two largest producers in the world, and I think whenever India plays in exports, it certainly does impact global markets. Otherwise, I think the domestic scenario when there's no exports is really needs to be looked at in isolation.
Great to have you on the show. Thank you so much for your time today.
Thank you for having me on the show.